Hello, I'm Mike Turner, and it's January 2025, and I want to give you a housing market update and my thoughts and predictions about what's going to potentially happen this year. Okay, let's get into it. First off, the data and the charts that I'm going to show you are from Jerry Webb Publishing down here. Web Charts, he does this as a monthly subscription service, pulling data from the Realtor MLS on the local housing statistics in the Boise, Idaho area, which is what I'm going to talk about today. All right, so this first chart is Ada County, where Boise's at, and you can see the different color codes there. There's a lot going on here, so let me just cut to the chase. This blue number here, that was 2019. That was pre-pandemic, kind of trying to get a sense of where the market was back then. And you can see that this is on monthly sales using and how many homes sell per county per month. And numbers were way up there. Over 1,000 homes per month was kind of pretty typical, especially during the summer months in the Boise, Idaho area. Since then, dropped way down. Of course, 2022 is when interest rates started kicking up hard and really cooled off the market. And the yellow is 2024, and you can see that year started at, we were behind. It started really slow. It started behind the previous couple of years, and then picked up. And it seemed like to me, like the thing was that it really changed was the fact that people stopped waiting. A lot of times, the last kind of coming into the end of 2023, and there was a lot of hope about maybe interest rates are going to come down, and then they kind of didn't. And so people are like, well, okay, this is how what the normal activity is kind of up here, and this is what it's been, depressed down a bit. So I think some people who've been waiting are finally just taking action, and now they realize that today's rates are kind of the new normal. Here's the same chart for Canyon County, our neighboring county, and you can see what's kind of interesting. Some key differences is that the yellow again is 2024, and it was pretty darn strong for more months. For most of the months, across the year. You can see that here. And especially compared to the year before, with a few exceptions along the way. But Canyon County definitely saw a surge in overall activity in 2024. And I think a lot was driven just by a lot of new construction was moving out there. And because it was just a bit cheaper to buy out there and with the high interest rates, it's just natural that makes sense. Back to Ada County, this is new construction. You can see how there's been more activity. It's the yellow again this year compared to the last couple of years, but below kind of pre-pandemic levels still. For resale homes, existing homes, you can see that here. It's pretty typical of what we saw the last couple of years. Not pre-pandemic levels. But not lower or higher, as far as resale activity. As far as home prices, right? So you can see here, it looks pretty flat. This is showing year over year and kind of changes per month, month over month. And, I would say for the most part, you can say that this was been pretty flat overall, right? Not really doing a whole lot of ups or downs. And, there's a couple spikes earlier in the year, but I'd say it averaged out pretty similar to the year before. For Canyon County, is the same kind of thing. Other than a few months in the beginning of the year, it was pretty flat, and interesting enough that, here, just try this here. It was pretty flat all year, and almost identical ending the year, very similar. All right, now this is supply, and supply is actually really kind of the main driver of all housing activity. And you can see from this chart, we can see that 2022, this is light blue. That's when interest rates shot up really quick, and the inventory followed suit. But luckily, it came back down. Not enough people are putting their homes on the market, and therefore it kind of leveled out. And this year, we've kind of just been hovering similar to what we saw previous years, but we're kind of following a trend of about like this 1,500 homes on the market kind of thing, and it kind of swells up and down throughout the year. It's worth noting that Canyon County has kind of a surge in inventory over previous years. So that's something to watch, okay? Because that's it's a significant jump, and so in theory, the prices in Canyon County might be a little softer than they are in Ada County right now. All right, this shows interest rates over time, and you can also see here that you know, in the last couple of years since 2022, we've kind of been in this state of of higher interest rates. You're kind of on par what we saw a little bit previously, but this is where we're at. And in a moment, I'm going to kind of recap all of this and tell you what I think it all means. So with demand, back to this, I want you to take the takeaway for me is that there's been kind of a surge of activity going on, and this illustrated right here, where these significantly above previous years coming in this fourth quarter, a lot more activity. And you can speculate a lot of different reasons of what that is. Can't wait any longer. They're forced to move because of work, or maybe stuff with the economy or whatever the reason is. There's a surge of activity, right? And I believe January you'll see the sense. Now, is that short-lived or long-term? We don't know, but I can tell right now, like, the market's a bit hotter than it was the previous couple years for this winter. So with inventory kind of holding its pattern, I don't expect any swings in the market in the short term, far as pricing and stuff like that, because it's kind of holding. It's not actually considered that much inventory right now. That it's historically we're going to be looking at things like this. So this chart shows you 2006, 2007, 2008. So 2006, you see it climbing, how we were at that kind of normal level, and it just climbed. And this should, of course, have been a warning sign 2 years in advance for everybody. But anyway, it climbs. This is how we get into hot water with a real estate market. It does this action right here. So if we're seeing this action ever start to happen in our housing market, know that home prices are going to take a massive hit. And it doesn't always happen overnight, by the way. In 2007, home prices still kind of came back up a little bit, but because there was so much demand, but eventually it tops, it crumbles on itself. And so we are here, right? We're down at this level. And so we're not in any danger right now, and it's doing our normal trend of kind of swelling up in the summer and then coming back down. So I anticipate that to be the same coming this year, and I feel like inventory could even drop further if demand is picking up like I've seen it. So we'll see if more people put their homes on the market this year. Right now, that hasn't been the case. For the last couple of years, it's been pretty tight, but I don't know. We'll see what happens this year. But right now, if the normal trend continues, I expect the inventory to fall even further than it did this past year. So looking at the overall past, the last 20 plus years, you can see like this almost seemed like the new normal of how many home sales we would have in the Boise area in a given year until recently. Now we're kind of down here. So, will we get back up into this higher level here? I don't know. A lot of this has been happening because of extreme tightness in the market. However, we had a tight inventory here. We just had huge demand. And that makes sense because interest rates are half what they are now. And so therefore, the kind of cost of housing was near half. So with the higher interest rates, it's going to be still tricky. So what's the plan with interest rates? I think they're actually going to stay kind of fairly high. There's predictions that they will drop, and by the end of 2025, maybe even be in the high fives. I think that's an optimistic view, mostly just seeing what's happening in the world economy and how the world economy is not doing so good. Shipping's kind of breaking down. There's some messes on, basically both sides of the world of between wars and infrastructure issues. China's a mess. Russia's a total mess. Europe is struggling big time. Africa has always had problems. South America has got tons of issues going on. So it's just overall globally not that healthy, and it's not trending in the right direction. So all that can mean to me is that the global goods, globalization is going to continue to struggle, and therefore impact inflation. Things getting goods and services is going to be strained at best, and so I feel like that's going to impact pricing. And until ultimately we get more manufacturing and stuff back to North America, which that trend has started, and so we're not as dependent upon bringing everything in. But it's a slow process that's going to take years, and I think best case scenario is that we're going to be fighting inflation for many years, and therefore it's going to be hard for the Fed, who's kind of controlling these interest rates, to justify lowering them. Unless the economy really takes a nosedive, I just don't see that getting better in the next 2 to 3 years. I hope I'm wrong, because it'd be nice to see interest rates come down. But I think that's going to be overall package. So what that does to price is that price in a market that has fairly low inventory and significant demand still and a growing population, even with high interest rates and other challenges and like extreme unaffordability, even with those things, it seems like the likelihood that pricing will kind of hold as it's been kind of doing over the last number of years, right? It's just kind of fluctuating in that kind of range. And I don't see a whole lot of reasons why that would change significantly unless something globally or nationally really impacts all economies, and which could totally happen, right? Like, who knows how the fires in California are going to ripple effect down to other things. They can, and who knows what's going on in Europe and China and all the rest of it, how that can ripple effect into our economy. But it might, right? So, and sometimes it's good and bad. Like sometimes, like COVID, right? We saw a surge. But it seems like we're kind of reaching this kind of normal state, and that's what I'm predicting for 2025. So if you're trying to make a decision on what are you going to do for real estate this year, I'd say see what you can see right now, and if you can make a move that makes sense, make a move. I don't see an advantage by waiting, but if you don't need to move, don't move, right? But I don't see a strategic advantage in kind of trying to time something. So anyway, that's the market report for January 2025. If you have questions, reach out. Take care.